Hey, what's going on, y'all? It's Gabe's Corner here. So now I'm going to show you how I like to trade supply and demand zones. So right now we're just going to use a demand example because this was what I found today. It was a super easy trade. So I like to classify a demand zone as basically just strong selling. Now, there can be demand zones on different time frames. There can be demand zones on the daily time frame, the 1 hour time frame, the 5 minute time frame. All time frames can have a demand zone. Now, the way that I like to classify my demand zone is a minimum of 3 candles, and I want them to be bigger than the surrounding candles. Now, in this case, this still counts as a demand area. As you can see, there are 5 candles in a row. However, they are not bigger than these selling candles, but this still can count as a demand zone because it still went from here all the way up to here, which still is considered somewhat of a big move, especially when there's no pullback. So we can assume that if price comes back to this area right here, this 1 hour demand zone, we can assume a similar move should happen. So basically what we're going to do is we're going to continue and see when price comes back to retest that demand area. And what we're going to do is we're actually going to zoom in on the 5 minute chart so you can actually see the trade that I did take. So right here, let's zoom into the 5 minute chart and see what that looks like when price came to that area. So boom, perfect trade right here. As soon as price comes to this area. Now, sometimes what you can do is you can actually wait for a retest of this area. You can wait for the reaction and then price will come back down and give us a retest. Let me show you exactly what that would normally look like. And this is the ideal trade that you want to take. You want to see a reaction, which is these 3 candles, right? These with the bullish pin bar, the solid bar candle right here. But we want to see a retest and then we want to see it continue up in this direction. Now, NASDAQ, a lot of times will not do a retest just because NASDAQ is NASDAQ. But what you could have done is as soon as you saw this bullish pin bar, that counts as also an indicator candle that I like to use. For my indicator candles, I like to use bullish pin bar candles. I like to use solid bar candles, as you see right here. And then I also like to use engulfing candle pattern. So this could have been the trade right here. As soon as you see a bullish pin bar and the next candle breaks the high, you could enter this trade right here. Your stop loss is below the zone. I like to put my stop loss a little bit far below the zone, especially with NASDAQ or gold or something that's more volatile, because a lot of times price will like to move around before actually giving the move that it actually gave without moving around. But a lot of times because it's NASDAQ, I like to put my stop loss right here. I don't like to put it right here or right below the wick of that candle because, like I said, a lot of times it will move around before going up. But this easily right here would have given you, if you can already see, we're already looking at practically a 3-to-1 at this point. Easily, yeah, 3-to-1. Just on a nice reaction on a demand zone. So this is literally how I trade my demand areas. My 1 hour zones, my 1 hour supplies, I trade them the exact same way. So let's see. Let me see if I can find a 1 hour supply example for y'all. Perfect. One is right here. Let me mark this down. So for our supply zones, I categorize them the exact same way. We're basically just looking for strong selling. Now we have 2 candles right here. So technically the supply zone will be right here because you see how we have 2 candles here. However, these 2 candles wiped out all of the buying that happened right at this area. It wiped out all of these candles in this 1-2 candle right here. So last time price came here, it dropped all the way down to here. So this is a supply zone. And basically what we want to do is we want price to come back to this area and then we want to see what it looks like. So let's cut right here. We're going to zoom into the 5 minute chart so we can see what happens when price comes back to that area. So again, this is our 1 hour demand. We want price to come back to that area and then we want to see some type of bearish indication. So right here, boom, we get a bearish pin bar candle. Now, like I said, you can enter, if you're a more aggressive trader, you can enter this right here. As soon as the bearish pin bar candle is formed, this is our reaction. And once the next candle breaks the low, you can do this. You can have your stop loss again, nicely above that supply zone. This is a nice, you can put it right above this wick. You don't have to put it really too far because if price comes anywhere up here, we're assuming that it wants to break above the zone. So this could have easily been your trade. But if you're a more passive trader, you can wait for the retest or a lower high or something like that. So let's see what happens. Again, see what would have happened if you were an aggressive trader. You would have got stopped out right here. But now we see that price is going to make some type of boom. We got a bearish head and shoulders pattern right here. Bearish head and shoulders pattern. So my entry, again, if you're being a more conservative trader, you're being a little less aggressive, more passive, you could have seen this bearish head and shoulders pattern. You see a solid bar candle. This is your indicator candle to get in. and the next candle broke the low. So as soon as the next candle breaks the low, your entry could be right here. Stop loss is above this area. And then let's see, where's the 1-to-1? I think this went down a lot from here. Yeah. So, okay. So you can clearly see this went down from here. And then look how much of a move that was. Look at this move. Boom. Yeah. So this is already looking at a 3-to-1, 3.6-to-1 and continuing. So you could have got literally a 4-to-1, realistically a 3-to-1, because you would want to target no, there's not really any zones. I guess you could first target this 200 EMA, which is also another big reaction area, giving you a 2-to-1. But then again, this is a easy 3-to-1, looking at a 4-to-1. But that's the trade. So this is really how I trade my supply and demand areas. All it is you're just marking down key areas. And again, you can do this the same thing on the daily chart. All it is marking down strong selling areas, which are our supply zones, and you're marking down strong buying areas, which are our buying zones. And now that I'm looking at it, I see one more. So I'm going to give you guys one more example just because this is super quick and super easy. So right here, again, this is a newly formed demand zone. Boom. Boom. These two big candles just wiped out this candle. So again, we want to see what happens when price comes right back to this area. Let's erase the chart so we can see what exactly happened on the 5-minute chart. So again, waiting to see how price reacts to this area. So first, boom, this is a safer trade. So first we got our reaction. We got a smart money move on the 5-minute chart right here. This is the reaction. Now we want to see how the retest happens. We want a indicator candle, some type of bullish indicator candle. Now, this can be considered a higher low. So as soon as you see something like this, this is a bullish indication. You can enter right here. Stop loss is below this zone. And then you can try to catch this 5-minute supply right over here. Remember how I said that you can have supply areas on any time frame? So this is the 5-minute supply right here. I would mark this down. This would be my first target. You know what? Now that I'm marking this down, I actually think I did take this trade. But basically what you can do is you can take this trade right here. And now I'm realizing I could have just been pressing buy so y'all can actually see what it looks like. And what did this do? So this one actually kicked you out. So it gave you a lower high, but then it did kick you out. But what it did was it actually snapped back above. This is the trade that I took. It actually snapped back above with a solid bar candle. The high didn't break, but you could have definitely entered that trade right here, right over around here. Yep. As soon as we see this, bullish solid bar candle right here. That's why I like to use this. This is a little bit in the way, but we can use something like this. Stop loss is below here. This is the trade that I took and now goes up. Yes, this is the trade that I took. I do remember this one. And then again, your target can be up here. Even the 200 EMA, which is almost a 2-to-1. But as you could see, that would have been your price target. Somewhere around this, whatever this 1-to-1 area is. But again, this is how you just draw supply and demand areas. Again, like you can see right here, this gave a lower high, but it snapped right back under. So it's always good to wait for a indicator candle like this. This is a bullish engulfing, like I said, engulfing candle pattern. That's one of my other indicator candles that I like to see before entering a trade, just because it's a higher low. See what I mean? This is, if you were an aggressive trader, you just see a higher low, but you did not get an indicator candle. You didn't get a solid bar candle over here. You didn't get a bullish pin bar. You didn't get a engulfing candle pattern. You didn't get a candle indicator that price wants to continue up, and it didn't. It went down. Over here, for the more passive trader, you got this solid bar candle. It's also engulfing the previous candle. The next candle broke the high of it. That's a solid trade right here. That's a lot of confirmation. Stop loss is below the wick of this candle and also below our 1-hour demand zone. And then you caught this move going right up to here, almost 2-to-1. I take out my profits at 1-to-1. So I would have been out, like 75% out right here. Would have let my runner hit that 200 EMA. Would have got out somewhere around this 200 EMA. But yeah, that's literally how I trade, demand and supply zones. Let me know if this helped you out in any way, and let's get this money out. Let's go.